All right, let's talk about how we can solve for all of these things and what the renovation loan does and what the capacities are. So the good news is that the renovation loan can be used for purchase and refinance, okay? And it is a hybrid. Everybody loves the word hybrid these days, so I had to throw it in the presentation. It's a hybrid between a traditional 30-year fixed mortgage and a construction loan, okay? Construction loans by nature take into consideration what you are going to build. That's the point of the construction loan. The lender is taking a look at your plans, they're taking a look at what you're going to build, and they are assessing value based upon those things. I like to say when you are taking, and construction loans are hard to get, okay? Construction loans are super hard to get. And when people ask me why, I always remind them, because you're asking the lender to lend on something that is invisible, right? With the promise that one day you are going to make this renovation and you are going to complete it. We're going to hear a little bit from some of the contractors and builders in the room at the end of this transaction, at the end of this seminar. But obviously, starting the work and completing the work are two completely different things. We started this seminar out by asking David Polk from Fidelity National Title, what happens if they have an open permit? The question is always, when folks come to us, and that's a very real situation. In fact, we are dealing with sellers right now and listings right now that the seller did embark on a journey to build a second story or build out an addition in the back or started to build an ADU or whatever the case may be. And because of whatever reason it is, whether they lost their job, they just lost confidence in their job, in the construction, they lost contact with their contractor, or maybe had a battle with their contractor and cannot proceed. Whatever the case may be, they never finished the construction and they ran out of money. Because material costs, especially if you started this stuff during COVID, doubled, tripled. You may not even be able to get the materials that you need any longer. Or they're on long back order. And in the meanwhile, things happened, right? Somebody in the family lost their job. Somebody may have passed away. All different kinds of things that may have occurred to where now we've got a home that is half built or partially renovated, and they have to find a way to offload it because they do not have any more time, they do not have any more money, and they don't want to continue with the construction. So how do you sell a home in that condition, especially when it has an open permit, okay? So people ask me all the time, well, do you have any loan programs that allow for an open permit? And I say, yes, we do. We've got renovation loans. If you have an open permit, that's fine. We're just going to pick up where your permit is. We're going to continue building, and we're going to help you fund it based upon those plans because it is a hybrid between a traditional 30-year fixed mortgage and a construction loan. We are forward thinking. We are taking a look at what is going to be built. Your issue, though, is going to be your title insurance. And that's what I always say is, we can mitigate that stuff, but we've got to find a way to get you some title insurance. Because just like David Polk talked about, what the lender is concerned about isn't your open permit. We're concerned, and title is concerned, that after you purchase the home, that you're going to be sitting there in your underwear, eating popcorn and watching a Netflix, and there's going to be a knock on the door, and it's going to be the contractor that was working on the property before you purchased it, and he never got paid. And now he wants you to pay $100,000 for work that the seller had actually ordered from you. But because the materials are sitting in the middle of the home, who is now responsible for that payment? That is what David was talking about when he was talking about mechanics liens or liens against the property from contractors. Contractors or folks that were involved in the construction or renovation that they believe were not paid completely or fairly for the work that was performed on the structure, and because of that, they're going to go after you for it. They're going to get their legal team in there, and they're going to place liens on your home. So that's why I wanted David to talk about what Fidelity does in order to mitigate that. And what they will generally do is they will have, you sign a bunch of paperwork. So like he was saying, they'll generally have you sign a bunch of paperwork from your contractors that says that they were all paid and that they were all paid satisfactorily. And this will not just come in a form of a small little letter, it generally comes in the form of a contractor's affidavit. So he is signing a notarized document that says, yes, I put the roof on, but I was paid fairly and satisfactorily for the roof. There's not a penny outstanding. We're good to go. I'm signing off on it. And a notary will take that in. It will also notarize his signature. Now, so when we talk about renovation loans, open permits, okay. So that's the first difference. Renovation loans can be used for purchase and refinance. They can be, and they are a permanent solution, meaning that we do not write renovation loans as our adjustable rate mortgage or anything like that. It is your first mortgage, and it will allow for the full 30-year fixed. In fact, right now we're not even writing them as 15-year fixed because nobody wants 40% higher payment, right? We're always looking for the smaller payment. It allows you to extract equity in the form of cash based on the renovation contract. So let's talk a little bit about that. What that means, what a renovation loan is, and why it's a hybrid between a traditional mortgage and a construction loan is because let's say that you go into an area and you find a home for purchase and you purchase it for $400,000. Let's say it's in Waianae, the roof is falling in, there's an elephant sitting on it, very similar to the picture that we saw when we first started this renovation seminar. So let's say you go out, you find a home in Waianae, it's $400,000, okay? And then let's say that you go out and you get a wonderful contractor who's willing to rebuild that amazing property for you for $200,000. So what the renovation loan does is we add those together, okay? So now you've got $600,000 as what we call an acquisition price. We take the $400,000 plus the $200,000, so it's $600,000. From there, you put your down payment down. And so if you're doing 5% or 10% down, it would be 10% down of $600,000. Well, we've got some steps on this, but the point of this is that when the loan goes to closing, no work is performed before the loan goes to closing because it's not your house yet, right? It still belongs to the seller. So what will happen is when the loan goes, everything is proof subject to, the loan will go to closing, that $600,000 will move into escrow, $400,000 will go to the seller as you contracted for the sales price, and $200,000 will go funded with PRMG into a separate escrow account that then is divvied up to the contractor as he takes draws. And generally, draws will be 3 to 6 draws depending upon the scope of work. Okay, we'll go into this in a little bit deeper, but let's get through some of the requirements and then we'll really break it down. So internal and external appraisal is required. So you are going to have someone coming in and taking a look internally and externally. They will be walking through the home like a traditional appraisal. However, they will have information based upon the remodel that you're going to perform. So in that respect, the home does not need to be free of health and safety issues because this is a renovation loan. We know you're going to fix that stuff. That's why the permit can remain open. We know that you're going to finish it out and close it. The appraiser uses the after completed or subject to home value. So what does that mean? That means that when you get an appraisal report, on the bottom where it tells you how much your home is worth, on the bottom there's 2 boxes. One says as is, that's how most appraisals are written, okay? And the second box says subject to. And that's what a renovation loan does. It takes into consideration the subject to renovations that you are going to be doing to the home. So if your intention was to build that second story, then what the appraiser is going to do is instead of appraising that home as a 1-story, he will appraise it as a 2-story. Instead of appraising it as the 4-bedroom, 2-bath that you have now, he will appraise it as the 7-bedroom, 3-bath that you're going to have a year from now. Okay, and that is what we mean when it's after improved value, subject to, and now you can start to kind of see that hybrid component of a construction loan, because once again, they are attributing value to something that right now is invisible. Okay, so because it's a fixed rate mortgage, fully amortized, principal and interest payback, you would not have to refinance it later if the interest rates continue to rise and you still like the interest rate that you're at. The lender holds the monies in an escrow account. So in that example that we just gave, the $600,000 acquisition cost, $400,000 goes to the seller, $200,000 goes to the escrow account, and the lender will divvy it up to the contractor. Funds are dispersed upon work completed in the form of draws. How many in this room have been involved or have heard of a story where the contractor came to your home, told you that he was going to build you a beautiful fence, asked you for $10,000 to go to Home Depot, he'll be right back, and never came back, right? Many, many, many folks have that story. That happened to my parents. My dad loves to look in the newspaper and look at ads and talk and get the cheapest guy. And then after he finds the cheapest guy, he'll have my mom call him, who's a crazy little Vietnamese lady, and then she'll, bargain him down even more. So they never want to use my friends, though. In fact, many of my friends don't even want to work for them anymore because they're like, they're too cheap. So that means that I got to get in there and do that stuff. But anyway, so funds are dispersed between work completed. So what that means is the contractor will take a draw, and let's say that in his construction contract, he lays out that in order to build that second story, the first thing he's going to do is go get his materials. Then the second thing, that's draw one, right? Then the second thing that he's going to do is start to lay the wood on top of the home so that he can build that platform to start to build the rest of it. That's draw number two. The third part of that contract may be to put the roofing on. So now that's draw number three. And then draws 4, 5, and 6 could be to fill in the rest of it with the rooms, the drywall, all that other, and the fixtures that are going to go in to build that second story. With renovation loans, so what's going to happen is that the lender is going to have an inspection at each of those draw periods. So if he says the second draw is to put the wood up and build the structure and frame the home, frame the second story, the lender's gonna go out there and make sure that he took the materials from draw number one, put up that structure and frame the home. That way they can get the second draw and move on to the second draw. It's quality control to make sure that what is supposed to happen is happening and is happening on time. Okay? All right. So when we are dealing with renovation loans, it's always going to be scope of work. I'm just going to check the time. Okay, we're good. We're always going to be looking at scope of work, and we're going to be talking about whether it is a minor renovation or whether it is a major renovation. Okay? Minor renovation is depicted as $35,000 or below. This is going to be your cosmetic only. Okay? This house is great, except I really want to remodel the kitchen. Up to $35,000. This house is great, except that the bathrooms really need updating. They're super disgusting. Okay, great. Up to $35,000. Unless it's the termite damage in the rafters like we talked about before. Okay? In that space, it's going to be considered a major renovation, because if you already have termite damage in parts of your home, how do we know that you don't have it in all of your home? How do we know that when we open up your wall or open up that roof, it's not going to be 100 times worse than what it looked like on the outside? Okay? So that's why if there is major termite damage, they're going to automatically treat it like a major renovation, because they just don't know what's going to be there when they open up the walls. Licensed contractor may be required. So once again, if you are doing a minor renovation and your renovation includes something like just appliances, you may not need a licensed contractor. But if you are performing a major renovation, you're going to need one. The owner cannot be the contractor. We get that question all the time. My husband is a contractor. Why can't he do the work? You know what the answer is? I've been to your house. I know that your husband has been trying to do your cabinets for the last 7 years. The first time I was here, he said that he was going to do your cabinets, and he didn't do your cabinets after the first year. The second year that I came, I saw the wood on the side, outside, in the garage, but the cabinets aren't done. And forward, the reality of it is in a family setting, sometimes we cannot get people to take out the trash. So how can we get them to build our cabinets, right? Because the reality of it is, especially when you are doing work for someone else, how is your husband earning money to pay the mortgage payment? He is going out building other people's homes. So if he stops doing that and he starts building his own home, what happens to your paycheck? Your house is going to go into foreclosure because now you can't make a payment because somebody is out a job. Okay? So that's one of the major reasons, because it mitigates the loss that the lender may feel for incomplete work, and it minimizes the fact that the work even won't get done, or it will not get done in a timely fashion, or the work will not get done at all because your house went into foreclosure because your husband stopped working or your wife stopped working to work on this home. And now, because of that, we're unable to make the mortgage payment. So there's a number of problems that can occur in that situation. So that is why the owner cannot be the contractor. Home inspection may be required, termite inspection may be required, depending upon the scope of work, depending upon what is happening there. So, what does the construction package consist of? The first thing is it is based on the contractor profile. So the contractor needs to be licensed if you are doing a major renovation or just any renovation. We cannot just have, if it's something small, you can have a handyman come in, but for the most part, it's got to be a licensed contractor. And just like we talked about in the previous slides, when it comes time to actually start the work, even on the first draw, we'll give you 50% of the money to go to Home Depot and get that wood, but your contractor needs to have the other 50%, right? If you're working with a contractor that cannot rub two dimes together, what's going to happen when he needs to go down to Home Depot and buy a hammer, right? So that is why the contractor profile needs to be a strong, licensed contractor that's free of any type of major issues as to why he would not be able to complete the work or complete the work on time. Permit certification. So the other thing that when we perform on the construction work, the contractor has to talk about, there's a form that he fills out that says what kind of permits he is going to need. Is he going to need a building permit? Is he going to need a restorative permit? Does he just need electrical and plumbing permit? Which permit does he need? He needs to certify that. The consultant's going to cross-reference that. And then, of course, he needs to put together his builder quote or his construction contract layout. And when he does that, then all of that information will be given to the renovation consultant. The renovation consultant is going to really dig into the specifications of repairs. Once again, how many pieces of wood does he need? How many nails does he need? All of that stuff is going to come into play. And then, of course, all of that is going to feed into what we call a cost breakdown to make sure that the project is fully funded. And what we mean about that is kind of going along with how my parents love to go find the cheapest guy and then bargain him down. And then guess what happened? He always ran out of money, right? He may say that he's going to be able to do it, but come a month from now when he's in the middle of the building the fence, he'll be like, I didn't really know what was going to happen, but now I'm out of wood. I need to go get more stuff. Okay, that is what happens when you don't cross-check your work and when the project is not fully funded. That means that you're going to run out of money, and then he's just going to come back and ask for more money. Okay, so that's what the purpose of specifications of repairs and cost breakdown. And then once again, the appraisal is going to be performed. It's going to take all that information, and the appraiser is going to assign value to those invisible improvements.